Hey there and welcome to the channel. In today's video we're going to be going over the latest earnings for Meta, which happens to be the biggest position in my personal portfolio. Now Meta is in my opinion a great example of the advantage you can have when you're able to think rationally while the market is being irrational. Even with a huge company like Meta, which is known to most people, you can still get these amazing opportunities to buy in. Now at the earlier peak, Meta was trading around $379 in August of 2021 and went all the way below 90 in October of 2022 and is now back up again to almost $475. If you go over my highlights for Q4 of 2023, we can see that revenue by user geography is actually at an all-time high of $40 billion for the quarter. And we can see here how that revenue is split, where the family of apps are actually generating $39 billion and the revenue from Reality Labs was just over $1 billion. And the total losses for Reality Labs was actually $4.6 billion, which is the highest that we've seen, and the management team of Meta is not expecting Reality Labs to be profitable anytime soon. But some more positive news for Meta, where we are seeing the operating margin up to 41%, but it actually went down to 20% in Q3 of 2022 and Q4 of the same year. And we can see here that Mark's year of efficiency has been paying off, where we can see the cost of R&D as a percentage of revenue went up to 33% in Q3 of 2022 and the first quarter of 2023, where it's actually gone down to 26%, which is really positive for shareholders. And you can see the same development in the cost of revenue, the marketing and sales, and the general and administrative. Net income is also at an all-time high at $14 billion, having gone down to $4.3 billion in Q3 of 2022. Now there's also a huge difference in capital expenditure compared to 2022, where the company spent $32 billion compared to 28 billion in 2023. Now family daily active people, DAP, is a key performance indicator for Meta, and we can see a slow and steady increase in that metric, going from 2.8 billion people in Q4 of 2021 up to 3.19 billion in the latest quarter. Now for those of you who don't know, a family daily active people is somebody visiting either Facebook, Instagram, WhatsApp or Messenger on a daily basis. Now family monthly active people, MAP, is a similar KPI which measures the monthly visits instead of the daily visits, and has seen a steady rise from 3.59 billion up to almost 4 billion in just 2 years. Now family average revenue per person, ARPP, is another very important KPI for the company, and Q4 of 2023 saw this number go finally over $10, where it had a previous high of $9.39 in Q4 of 2021. And another key performance indicator for Meta is actually Facebook daily active users, DAUs, but the company talked about on the earnings call that they are going to stop reporting this number, so we are seeing it now for the last time. But we can see a very slow increase in the Facebook daily active users, going from 1.9 billion 2 years ago up to 2.1 billion. And now for my favorite part of the investor presentation, which is the free cash flow part. But we can actually see that the company generated a little bit less cash from operations at 19.4 billion compared to last quarter, which was 20.4. And the free cash flow for the quarter was 11.5 billion compared to 13.6 last quarter. Now if we compare the free cash flow for this quarter to the free cash flow of the Q4 last year, which was only 5.2, we can see a significant difference there. And if we take a look at the whole year for Meta, we can see that they actually generated a pretty decent amount of free cash flow if we add all of these together, they make up about $42 billion of free cash, which makes Meta one of the best free cash flow generating machines in the world. And if we compare the $42 billion of free cash to the current market cap of $1.2 trillion, we can see that the company is actually not that expensive, only trading at around 30 times free cash flow, which is certainly not a number that I would be buying the company at. But I'm pretty happy to hold them at this price. Now let's take a look at some of the highlights from the earnings call. But like usually, the earnings call is centered around future projections of revenue and capital expenditures. So a lot of the times there's not much for fundamental investors to pick out. But I do see a lot of value in listening to Mark Zuckerberg and the management team talk about the projects that they have ongoing and how monetization is going with a couple of things like WhatsApp and Messenger, and how those platforms will be able to impact revenue in the future. Now my first highlight was the success of Reels, but it continues to do very well across both Instagram and Facebook, where people are resharing Reels 3.5 billion times every day, which is pretty good to see, as more engagement from the users means or usually means more ad revenue. And Threads is becoming a meaningful competition to Elon Musk's Twitter, or X as it is now called, where the platform is growing steadily with more than 130 million monthly actives, which is a pretty high number, seeing as they were just created last summer, I believe. And the company still maintains a very healthy balance sheet, where we can see that they have $65 billion in cash and only $18 billion in debt, which is not much if you compare that to a $42 billion free cash flow. Now the company bought back $6.3 billion worth of stock in Q4, which brings the total for the year to $20 billion of share buybacks. They still have $30 billion remaining, and they are adding $50 billion to the share buyback program, which I'm not sure is a good thing for shareholders, seeing that the company has a history of just blindly buying back stock, and they're not really thinking about the valuation. They're just thinking about not diluting shareholders too much because of all the stock-based compensation that the company has. And some more color, like analysts would say, on the growth in Reels and video overall, as the daily watch time across all video types grew over 25% year over year in Q4, which is pretty impressive. And the biggest news for Wall Street, and probably one of the biggest factors in the company going up almost 20% in one day, is that Meta is now going to be paying out a dividend. So normally I'm not really a fan of companies paying out a dividend, but in the case of Meta, they are now a huge company at $1.2 trillion and are generating so much cash that it's going to be tough for them to reinvest all of it into the company. And so in this case, I am pretty satisfied with Meta paying out a small dividend. So just to conclude this video, a quick summary on the full fiscal year of 2023 for Meta, which was pretty good, and we saw a healthy growth in both revenue and free cash flow. The return on capital is still pretty high for the company, and the management team has really been putting in good efforts in making the company more leaner and more efficient. So for me personally, I am happy to keep holding the shares at this valuation, although I am going to be diversifying into more companies, since Meta is now such a huge part of my portfolio after the latest increases in share price. But that's it for the video today. I do want to ask you to like the video and subscribe to the channel if you haven't already. I want to thank you for watching, and I will catch you on the next one.